And there is no way for pivot. This is what market hawk James Bullard said. While markets pricing a step down in the rate hiking cycle closely followed exactly aforementioned, James Bullard said policy is almost in restrictive territory, but not as supposed. So policy has to stay on the tighter side in 2023, and economy must exert itself to handling with interest rate level at 5.25 to 5.5, what he said according to dot plot projections. So it means there are up to three rates hikes upon this quarter, possibly, if nothing bad will occur on the way. So recently, that wasn't that only speech that made the sentiment around the markets relatively worse. Producer prices slid by the most since the start of the pandemic, and retail sales fell by the most in the year. Alongside business equipment production slumped, causing the weakest quarter for manufacturing since the onset of the pandemic. The question is, do the falling consumer losing steam and business investment, the two factors we've been recently tracking very carefully in terms of searching of harbingers of recession, gives out that concerns highly probable right now. And what about tech stocks that were predestined to rebound? Amazon, Google, Meta, and Microsoft that recently announced highest layoffs since 9 years. Welcome to the next episode of Blockrevision. Without any further ado, let's start up. Alright, and we are with economy view section. The section you will find out the most important elements that right now hits up the economy and also sets the scene around where many traders and investors are playing accordingly. So what's first? Something big is in the air, talking about Microsoft. So Microsoft decided to lay off 10,000 units. I say about jobs. So Satya Nadella wrote that the layoffs would happen before the end of March and affect less than 5% of the company's worldwide workforce. So I would say we might have expected this, as the market barely moved a muscle to the news. So Microsoft is one of the companies that waited the longest among those market behemoths, where many other leaders significantly slashed staff already. As a reminder, Amazon recently said that it was laying off 18,000 people. So the tech sector, by and large, talking about what happened upon recent 2 years in order to get the broadest spectrum, had been only years-long high in spring as companies invested in expansion and competed for talent by offering lucrative pay packages. The pace of hiring accelerated when COVID-19 set in as the companies rode a wave of supercharged demand. Right now, we are talking about layoffs as the market circumstances has changed. And it's not merely Microsoft, as we can find that recently the January wasn't very favoring those market participants to stay on its places, where we can find that after this, I would say a much more positive December, where no, I would say not many employers are that dreadful in their opinions and positions to tell the employees that they are about to get laid off right before the Christmas Eve. So they are postponing that stances to January, where we are right now finding out that those rebound in layoffs have been visible. Is the worst over? I don't know yet, but we are talking about layoffs. But what about demand disruption caused by Federal Reserve's rate hike regime to stamp out inflation? So we might be dealing with heightened probability for some companies to default, and it will be a complete transformation from the last decade, where historically low interest rates created an easy environment for few defaults and bankruptcies. That's what I told in one of the previous episodes. Amount of unprofitable companies upon Russell 2000 is really dreadful. So how long can the things go with a currently set order when economic headwinds are blowing with sometimes 12 level in Beaufort scale? The corporate default rate for the last decade or so has been averaging 2% compared with 4% in decades past. So defaults and bankruptcies might be not that scarce as it was back upon recent years. That's the pessimistic outlook. That's the one of the funny fact, or rather one of the experiment that may shock the trading arena. So the question is whether the returns on investments might be track-faced. So there's an experiment. Traders will have a camera mounted on the computers to record the faces and the gestures throughout the day, examining correlation between the behavior and stock market reaction. So the cameras will be linked to software from Israeli company formerly known as that was Blockrevision Interactive Technologies, hopes to develop an alert system for trends in traders' faces or volatility index it can sell to investment firms. And their goal is finding correlations between mood swings and market swings. So if the traders look enthusiastic, it might be time to buy. Other more furrowed brows than usual, could be time to sell or in reverse. So that's kind of an interesting experiment, but I would say that that brings some concerns about privacy. So just look at the issues that we have recently found in China. Facial recognitions has been even more controversial cuisine, where facial analysis has been used in Chinese schools to monitor pupil attentiveness, or in Chinese workplaces to track emotion. So I would say that that may bring some points of concern about those of security guards of our privacy with those that are more willing to run this experiment. But I would also wonder about the one thing, the something that might be the downside of turning emotions into a number is just that it risks developing one of the most fundamental features of being a human, and I would rather have it that it won't work out, that experiment I mean. But if it works, that might be a very interesting point to study anyway. But as always, the strongest players, the ones that have the access to such technology, as I would bet that, as always, JP Morgan, Morgan Stanley, and Goldman Sachs might be the winners, whereas the average traders might be indicated by a lower winning rate in a longer time horizon. So recently, mm, I would say that those track-based experiments are getting more and more common in our society, where, for instance, tens of millions of us still use it um, unhesitatingly, unhesitatingly to unlock our phones already. So this the technology that might be used anyway in this way or another. What about the market outlook? Let's find out kind of what's going on the market, as recently the sentiment been spooked. So we are jumping into a bunch of charts, but I would focus mainly on SPX. So yesterday I said that if we cross this downward trend line from the downside and stay right there for a longer, at least by a market close, it would be a phenomenal point to buy, at least in those trading scenarios that assume that trend lines really matter. In this time it it matters, but as we're gonna find right after the transmission being broadcasted, we've seen a very strong sell-off. So it means that right now the market is rejecting that possibility of heading north. And right now, especially with on this 50-minute chart gap building, it has been formed a kind of a euphoric local euphoria that caused this sell-off even more serious in a medium-term horizon. So for me, as we are still haven't crossed this recent highs of beginning of December, I would stay with a assumption that there is at least a reverse to this 38 high 38 level, and right after another attempt may be found to test it once again. So SPX might follow like this trajectory, as we can find that we are getting more sticky, more and more sticky to this trend line. So it's getting weaker and weaker along the time. So it was about the SPX DXY, however, still maintaining at this trend line that's right now in a kind of decisive mode, whether to move further or not. Sorry, I cannot move it right now. In some of the yes, so this trend line has been crossed already on a weekly chart, on a monthly. However, we still have a chance to defend it, but it's I would say it's we are short of time. So I would bet that this trend line won't be defended. So for the downturn on major indexes, we must hang on for a while. But there are some horizontal lines that are of a not indifferential significance. So that there might be those are the lines that might be respected. And one of the last very important one is that the one of the end of May. So 101 might be the point of a reversal of DXY and bringing more O to the outlook for the markets. So we are heading back into the market outlook section, and that's what brings us the broader time horizon. And this line chart often removes the noise and in this chart we can find it recent bottom. Recent bottom almost aligns with the one of the COVID bottom. So taking it from that standpoint, we would have a very nice rebound point. Whereas when comparison to what happened back in 2007, back then at the 100 EMA on a monthly chart, we had a very weak buying spree. When we can find that this rebound was of a very low significance. Where right now we have a almost tweezer bottom, where the next candle, the extension of sequence of candles, almost engulfing the previous downward spree. So we are fighting with getting out of this 50 EMA on a monthly scale, and with such of a bottom with V-shaped trajectory, we may find that that's the much more strong chart than it was back in 2007. So I wouldn't bet for that heavy slide this time. What about the sentiment? So we can find that put and call options right now are rising, whereas right now we are in a pullback, but mainly this trend is climbing up. So it means it doesn't pay off to market makers to having this I would say the outcome of having a downward pressure to realize, and I would bet that by market makers it's also much more probable that we may revert to the upside, where the biggest pain is, as there are much more shorts right now than there are longs. So that's the thing that we need to take care of. And also junk bond demand is at the fear territory. So it means there is a higher demand for or lower demand for junk bond, and it means that there is a higher there are higher odds of getting major indexes in higher valuations. All right, what about the crypto outlook? So we are heading into a next section, and for this one I need you to watch it. What happened with Genesis. So Genesis Global Capital is laying the groundwork for bankruptcy filing as soon as this week, according to people with knowledge of the situation. So we had the Barry Silbert that already emerged after the collapse of hedge fund Three Arrows Capital, whereas Genesis suspended withdrawals in November, soon after crypto exchange FTX filed for bankruptcy, and the company is working toward bankruptcy process, where those restructuring plan and swap proposals with its creditors take place. Let me take some water. So Barry Silbert is the one that recently been accused of not paying back its debts out of Gemini, but also that's the company that's he's the governor of DCG. So Digital Currency Group is the one company that possess a grayscale investment fund. So that's the one that also stores many many coins on the balances, and if that would bring much more problems, if that would be something more than those $2 billion of outstanding debt, that might be a very troublesome indeed for the whole industry. Right now, it looks like Barry Silbert might cover the cost of the possible collapse, but what about the contagion costs, where those are the things that may entail other and drag down some of the industry back downwards. But on the other hand, the market might be already discounting that issue and trying to set this rebirth to the industry, where we can find there's a volume buying a volume, stepping in, and I would just end up with a conclusion that the weakest must fall in order to have the strongest go on. We're about yesterday's price action. So Bitcoin has slumped yesterday after the tweet out of Justice Department, where they have literally pre-announced that they will come over with an announcement. So yesterday everyone was preparing for a news bomb out of DOJ, and that's about have popped up was that the U.S. Department of Justice has initiated enforcement proceedings against the Russian exchange BitLato as part of legal enforcement. So Justice has initiated enforcement proceedings against the Russian exchange BitLato as part of this. As part of the broader process of chasing those shady companies. Right now, BitLato founder, what is his name? Lekodimov was arrested Tuesday in Miami and is getting to be sued for laundering around $7 million. So it wouldn't be nothing strange if not that the Bitcoin back then was overextended in price in terms of relative strength index, and that was what the news has come over. Very strange if you ask me. So every time when the price is overextended, especially in this crypto space, unregulated crypto space, some of the governor or the entity is coming over and telling that by some terms this asset class is overbought or oversold, and bringing a kind of a rush in this or that way, whether it's buying or selling. So BitLato is nothing really special, but they used so many high words in order to frighten the market that was really amusing. So Ether and Bitcoin has seen liquidations of an amount of $110 million, and just wonder whether such procedures of giving up the announcements shouldn't be, I don't know, postponed in some other market circumstances where we are not maybe so prone to make the upwards movement or downwards. As I mean, what I mean is that overextended market is absolutely very, very fragile to such announcements, and I would say that Justice Department was the one that caused liquidations on the Bitcoin side, and on the other hand, it might be sued by those market participants that may feel as victims. So let me know in the chat section what do you think about it, as I'm very curious, and the chat is going live if you haven't noticed already. All right. So so we are jumping into market mover section right now, and yes, market mover section is the one that brings over the trading economics as often. So this week is very interesting, and we had already on Wednesday retail sales that I've just brought to you. On Thursday, however, building permits and what's over there. Oh, right now, housing market is not going very well, but NHB housing market index recovers, fortunately. So there are some signs of a upcoming spring to this sector. We have along the way Fed calling speech, Fed Brainerd. That's also kind of indicative of the current sentiment and sentiment of Fed. Inflation rate in Japan. That's what we are awaiting, and retail sales from Great Britain that will turn up tomorrow is yet to get tracked. So in terms of earnings season, we have Procter & Gamble already published some data, and it's a bit better than expectations. So it's that was positive for the market as a whole. But we are waiting for Netflix, whether it will recover out of this recent market troughs. That's the question that many of tech proponents are posing themselves. So that's for today. Tomorrow there is not very important day of earnings season. So it looks like the worst is over, and the price action on the major markets should maintain as it had been initiated recently, and what I mean on Wednesday. So we are awaiting Fed meeting in the beginning of February, and also the market is awaiting other data out of next week, out of earnings season. That will be Microsoft on Tuesday, and other tech companies as Tesla, automotive on along the way. So that's it, and right now we are jumping into trade idea. So in terms of trade idea, I need you once again to come over to our chart section, and for today I would have my attention caught by SPX for a moment, as we do know that we are awaiting another accumulation before another breakout. So I would watch it very carefully what's on right there. And in terms of another chart that is natural gas that's right now about to trying to build a base before possible rebound forward. But right now, as we have tested that recent highs out of 18th of January, and that this level be tested alongside, I would rather expect that we will watch natural gas to slide even downward once again to 3.0 9. So that's out of natural gas, but WTI is the one that I'm very hopefully waiting for, as we have negated on a daily chart, negated the recent price action where those inverted head and shoulders would play out. And right now, with this very strong bearish candle with a long wick, upper long wick, we might be rebouncing out of this recent price action, and right after would continue march downward. That's the initial scenario where I said that if we manage to hang around above this neckline, I would bet for WTI to move right back to 92, at least 92 area, but otherwise it would mean for me that WTI is dropping down forward. So in terms of short position, right now we are making a test. We are making a test of this trend line, and in my view there is a great chance for making a short out of here with an extension of 71.9. So in my view there is a so you may wait even for test of this recent lows, but for those that are having a larger or lower margin, that's setting up a lower margin, that might be a great chance to enter a position even at those levels. So I would find a fine entrance right now at the somewhere in the middle of 80.9 and 79.5. If the price will get out in this way or another, I wouldn't find this proposition of a trade as being valid. So react quickly if you wanna catch this move. But as always, this risk reward ratio at 5.3 is somewhat been the one that you need to answer to yourself whether you are willing to take such a risk of having this upward possible move with a risk, with putting a risk on your capital or not. So it's always about your tolerance to the price action, and in my terms, a risk reward ratio at 5.3 is very decent. But as always, you need to adjust the position and also the trade to your acceptance. So in this episode, that's it. Thank you very much for watching. If you have any questions, just put it in the comment section below the video, and as always, hit the thumbs up button if you enjoyed. So thank you very much, and see you tomorrow at 8:45 a.m. East time. As always.